Welcome to This Explainer. Look, today we're tackling what is probably the most anticipated IPO of our lifetime, SpaceX. We're going to strip away the emotion, tune out all the noise on social media, and just dig into the raw financial arithmetic underneath the rockets. Let's get into it. So imagine you had the chance to buy Amazon stock way back in 1997. You probably didn't, right? Almost nobody did. And for the next couple of decades, that story kind of haunts you. It's the ultimate financial FOMO. Well, the mere prospect of a SpaceX IPO is triggering that exact same emotional reflex in us right now. Because now there's another rocket, literally. And just hearing the name SpaceX does something to us. It totally short-circuits the logical part of our brains. We get so caught up in the hype that we completely forget to ask the boring but absolutely crucial questions. Things like, what am I actually buying? What does this business realistically earn? And critically, what are the actual risks? I want to hit you with an uncomfortable truth right up front. Think of this as a quick intervention before your brokerage app sends you a push notification that makes you do something you really can't undo. Quote, the SpaceX IPO could be one of the most dangerous investments of the decade for regular people. And hey, that is not because it's a bad company. Far from it. It's purely about the math. If there is one core mantra you take away today, make it this. There is a canyon-sized gap between a mind-blowing, world-changing company and a mathematically sound investment. The history of the stock market is just littered with the wreckage of investors who confused those two concepts. Now, to be fair, the hype, it's completely validated. SpaceX's corporate transformation is nothing short of a miracle. They were founded in 2002 with $100 million of Elon Musk's own cash, and they nearly went bankrupt in 2008 before a literal last-minute successful launch saved the whole operation. And today, they've built Starship, the largest rocket in human history, and they have over 6,000 Starlink satellites up in orbit. It's an absolute engineering triumph. But here's the thing. When you invest in SpaceX, you aren't just buying some cool rockets. You're actually buying three totally distinct, massive businesses rolled into one. You're getting a launch provider with reusable rockets, you're getting an entrenched government contractor deeply tied to NASA and the DoD, and, of course, Starlink, a rapidly growing global broadband utility that's pulling in billions from millions of subscribers. Which brings us to the number that makes everyone's eyes pop out of their head. $350 billion. That's SpaceX's last reported private valuation. Just to put that into perspective, that staggeringly massive number puts a company that isn't even public yet in the exact same zip code as century-old giants like ExxonMobil or JPMorgan Chase. It's already bigger than Goldman Sachs, Boeing, and Lockheed Martin. Wild, right? But there's a huge catch. That $350 billion price tag, that was born in the private markets. And in the private market, a handful of sophisticated funds essentially negotiate prices in infrequent trades. It's what you might call a useful fiction. But the second a company goes public, that fiction smashes into the harsh, unforgiving, second-by-second reality of the public stock market. And trust me, reality rarely agrees with private market hype. Let's look at some recent history for context. Think about what the public markets did to the last wave of highly hyped IPOs. Uber debuted at $82 billion and literally halved in a matter of months. Lyft lost over 70% of its value in just 1 year. Rivian IPO'd at north of $100 billion and lost nearly 80% in its first year. Retail investors just got absolutely crushed because they confused a really optimistic story with a cold, hard financial spreadsheet. Okay, yes, we absolutely have to acknowledge that SpaceX is a genuinely different beast than a ride-sharing app. They have real massive revenue from NASA contracts. Starlink alone is projected to hit somewhere between $10 and $15 billion annually by 2030. They have immense barriers to entry and a deep structural dependency from the US military, so the competitive moats are definitely real. But let's talk about the impossible math required to actually justify that massive valuation. To support a $350 billion price tag, analysts estimate SpaceX needs to generate $20 to $30 billion in annual profit within the next decade. For some context here, Boeing currently earns about $3 billion. Lockheed Martin makes around $7 billion. So SpaceX would literally have to out-earn the rest of the entire aerospace industry combined, basically from a standing start. Is that level of growth actually possible? I mean, maybe. If Starlink scales perfectly and new lunar transport markets open up, sure, maybe. But here is the major problem. You're paying a very high, very certain price for a totally uncertain maybe. Paying peak prices right now assumes that the future plays out flawlessly. And if there's one thing the history of capitalism teaches us, it's that betting on a completely flawless future is a really bad idea. Then there's this hidden complication we need to talk about: control. Elon Musk owns roughly 45% of the company, but because of how tech companies structure their share classes to concentrate voting power, public shareholders are going to have absolutely zero say. If you buy in, you are making an unconditional financial bet on Musk's centralized control without any real influence over the company's direction. And you've got to objectively weigh the risks of that exposure. When you buy SpaceX, you're inheriting Musk's scattered attention. Look, his track record is obviously extraordinary, but his time is totally divided. He's running X, he's launching XAI, he's dealing with regulatory tangles all over the globe. You are buying into extreme keyman risk. Whether SpaceX can continue to thrive without his undivided focus is a total unknown. Plus, the actual structure of the IPO is a total wild card. Musk has hinted in the past that Starlink might spin out first. If that happens, all that highly profitable, recurring broadband revenue leaves the nest. Without that financial anchor, the remaining rocket company's valuation would likely plummet, leaving investors holding the bag on a developing Starship program with super unpredictable cash flows. On top of all that, SpaceX doesn't exist in a vacuum. State-backed competitors like China's massive 13,000-satellite Guowang project and billionaires like Jeff Bezos with Amazon's Project Cooper, they're all aggressively building out constellations to neutralize SpaceX's head start. Not to mention, getting global licensing in places like India or Russia is incredibly complicated. Market dominance always invites heavy, well-funded competition. It all kind of reminds me of a very familiar dynamic. Back in the 90s dot-com boom, Pets.com had a truly transformative idea, but they completely failed. Years later, Chewy succeeded with the exact same idea. The massive potential of the space economy is totally real, but the timing can be disastrous if regular retail investors are just being used as exit liquidity, meaning you're the one left holding the bag so early venture funds can just cash out at the very top. So what's the play if you are a true believer in the space economy? Look at the reasonable alternatives. Existing public companies like L3Harris, Northrop Grumman, Iridium, or Rocket Lab offer direct exposure to space infrastructure. And the best part? They don't demand astronomical, everything must go perfectly valuation multiples. If you are absolutely dead set on SpaceX, just adopt a strategy of patience. Wait for the public earnings reports so you can see the real math. Monitor Starlink subscriber growth. And most importantly, watch the stock after the IPO lockup period expires. That's when company insiders are finally allowed to sell their shares, which almost always creates a massive dip. Remember, the best investors didn't buy Amazon on IPO day. They waited until 2001 when the price actually reflected reality. Let's just look at that staggering number one last time: $350 billion. By the time SpaceX actually rings the bell on a public stock exchange, the profound risks of space travel will still be very, very real. But the price you're paying will already fully reflect the dream. That is an immense price tag for an enterprise that still has decades of incredibly risky development ahead of it. Which brings us to the end. As this whole hype machine gears up, I want to leave you with one final provocative question to ask yourself. At this exact price, what has to be true for me to actually make money? Not what could be true or what would be super exciting for humanity, but what has to be true. You have to separate the absolute audacity of colonizing Mars from the cold, hard arithmetic of investing. Thanks for watching this explainer, and definitely think carefully before you make your move.